Hi, welcome to this course titled Invest Like the Gurus, a step-by-step guide, a proven system used by investment legends. My name is Isom. Are you an individual or investor that wants to invest like the legendary investor Warren Buffett? Do you have a strong desire to be rich by accessing timeless wisdom of these investment greats and their strategies as well? Do you desire a proven system that is capable of yielding you massive wealth in the long term? Maybe you have tried several investment schemes and strategies that didn't work, but you want to take charge of your financial freedom and live freely and let your money work for you. But you're not really sure how the market works. You believe that the stock market is a gambling floor, and so you are scared of venturing into the world of investment. And the bit about this course is that it doesn't require a training in finance, accounting, economics, or business. At the end of this course, you should be able to put together a portfolio of outstanding investments that is capable of yielding you above average return in the long term. You will appreciate and understand the psychology or mindset of these successful investors that are profiled in this course. You get to understand what to look out for when you are selecting an investment that has potential for above market return. The good thing about this course is that it's built with a lot of checklists that you can use to quickly detect stocks that may warrant further investigation. These are stocks that have potentials for very good return in the long term. Now let's get straight into this course. Let's look at the outline. Somebody once said that the shortest cut to becoming successful is to copy the way of the successful. You don't need to reinvent the wheel. Now this is what this system is built, this course is built to achieve. We clone the system of these successful strategies, of these successful investors rather, these legends. We took a journey into their minds, into their thinking, into their thoughts, into their strategies, and unfold them in the course of this course here. That's why we say it's a chronicle and a summary of the strategies of these investment greats, these legends, like Warren Buffett, Benjamin Graham, Philip Fisher. Not much to talk about Philip Fisher. James Keynes, Charlie Munger, Louis Simpson, Ed Top, Joel Greenblatt, and many others. The question is, what made them successful? There are thousands and thousands of investors all around the world, but very few actually are outstandingly successful. There are two parts of this course, two sections. This course is divided into two sections. Now, not much is talked about the psychology of these successful investors. Most people talk about the metrics, the analytical framework, ratios they use in picking winning investments. Not much is talk about their thinking, their mindset. Now, the first part of this course is dedicated to taking you into a journey into their mindset, their belief, their conviction about the market. And then the second part deals with the analytical framework, those measurable criteria you adopt when you are picking a winning investment. As an introduction, let's see what the legendary investor Warren Buffett said in one of his annual letters to shareholders. He says to invest successfully, you need to understand better efficient markets, modern portfolio theory, option pricing, or emerging markets. You may in fact be better off knowing nothing of these. That, of course, is not the prevailing view at most business schools, whose finance curriculum tends to be dominated by such subjects. In our view, though, investment students need only two well-taught courses. What are these two courses? How to value a business and how to think about market prices. This is what this course is built to achieve, to teach you how to value a business and also how to think about market prices. In discussing what made this investment great successful, we are going to look at, like I mentioned earlier, their psychology. Here we are talking about their belief system, their philosophies, their mindset, their conviction about the workings of the global financial markets, financial system, their actors, their approach to risk, and how they value investment. Also going to be looking at the analytical framework, which are the measurable criteria they use, both qualitative and quantitative. Now, in discussing the psychology of these great guys, we're going to see how they use the power of compounding to work to their advantage. We're going to see their definition of what a stock represents. We're going to be looking at what they call a business-like approach to stock investment. We're going to be looking at a long-term approach. There's a common denominator among these guys. They are all long-term investors. They are not traders. We're going to be looking at what their approach is, a concentrated approach. It turns modern portfolio theory on its head. That says you must diversify to reduce risk, but this guy actually concentrates to increase returns. It sounds crazy. We're going to see their approach. Also going to be looking at market time. A lot of guys believe that you must time the market to make it great in the market. We're going to see their thoughts about market timing. How do they define risk? Brilliant way to define risk, different from what we are taught in the business schools. Also going to be looking at their sense of independence that enable them to go against the market and win in the long term. Finally, we're going to be looking at what they call cycle of competence, the perimeter within which you should operate as an investor. Now, the second part deals with the analytical framework. Here we're looking at the economic prospect of the business. Warren Buffett talks a lot about outstanding economic prospect of a business. We're going to be looking at liquidity and cash flow, profitability and returns, their leverage, quality of management, which is very key. Most times we don't analyze management when we are picking investments. We're going to see how to analyze management. What are the checklists? What are the criteria used in selecting management that is shareholder friendly? We're going to be looking at earnings quality, which is very key. There are a lot of guys out there who are meant to trick and deceive investors. We're going to see how to assess quality of earnings, quality of financial reporting. We're also going to be looking at intrinsic value and margin of safety. Even when you pick a good investment, if you buy at a wrong price, it becomes a bad business. Now, this is the end of this introduction. In the next class, we're going to go straight into the course. We're going to look at their definition of what a stock represents. Thank you and see you in the next class.